presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. My pleasure to be here Monday through Friday. And what a perfect day it is today, Wednesday, the middle of the week. This is where my anticipation of some kind of a turn in the market is going to be tested. Let's just run the numbers. Thank you to the great host we had earlier on. Let's try to keep that standard up. The E-minis are up 14 at 24.38. The high that was made at 24.51.50, we went down to the 24.02 level, bounced, had an intraday slump during my show yesterday. It was a news-related event. Market rebounded strongly and then doubled the price again this morning to the upside, and yet the E-mini so far, you look at the 120-minute chart, F/B, stochastic very strong, stochastic at 92%, but starting to turn down. The next 4 or 5 hours going into the evening is going to be very important. So let me get this out the way here, the 120-minute chart on the right, and let's go to an overview. I'm going to do this. The Dow right now has made an all-time high at 21,580. That is 18 points above the previous high of peak D. I'm calling it for now a peak E. I could call it E/B, but just for the moment, I just want to know that I'm looking at it as a continuation pattern of the recent highs. Alternate count G/C on the 10th of June at 21,535. Technicals were very weak. Stochastic was weak and then flattened out in the 50% area. Now it's at 59%. On balance volume, we hit a low and then kind of rebounded. How we see a couple of things happen is going to be very important. If the Dow goes to 21,620-ish, that area, all of a sudden, and what I've been talking about for a while, when I was interviewed by Tom yesterday, I made a big deal about saying that it's fascinating that the Dow and the S&P have got sell modes in the daily charts, still within a big consolidation format since March the 1st. But what's really important about this is that the weekly chart hasn't given a signal, I said, not even a sell signal. It's held the 9-period moving average. The MACD is okay, it's not great. Stochastic is 88%, that's good. And so far, until the Dow breaks into the 21,190 or lower area, it's 100 points down from 121,190. Let me just go through that again. Yes, 21,190 area. I'd even have to say 170 to be safe. This is just business as usual, walking the 9-period moving average in the weekly, and the monthly chart is still acting very nicely. Here we go. The S&P trading at 2440.36, up 14.82, has failed to break above the previous high. The trend line resistance that we've been talking about for a while, and in my next webinar, when I do that, I will spend some time talking about trend lines because they are so important. They're going to be really important in the coming 2-3 months. This trend line here that the S&P has failed to break and hold above, it's gone above, but it hasn't held above it, makes it the area of 2443. I'm going to be safe. I'm going to say the high of the day, 2,444.18. Let's call it 2,445. If there's a break later today and the S&P breaks above that, there's no question that that high of the 19th comes into play, 2453.82. And so far, the weekly chart has made a peak F/C in the, this is the weekly chart, and that was the week of the 23rd of June, and now it's 4 weeks later and we haven't broken it. The monthly chart is still very positive, just like the Dow's is. Let's go on to the QQQ. Now, the QQQ gapped up today. This is a very unusual, just such a big gap. Little doji candle thus far. It is leg D in the 120-minute chart. I showed this to subscribers yesterday and follow through today. Here's that D that we were looking at for a left side, right side price time match. It hit it exactly to the bar, to the bar. And that was the high that we were looking at from 4 o'clock on the 28th of June. That was a high of 140.14. And today's high is 140.46. And it's trading above that 140.14 level to 140.24. MACD is very good. Stochastic's making a little M formation with a 90% reading. That's very good. On balance volume is running, and that's good. So as it stands right now, there's a trend line. And that trend line, which I meant to draw in, and I forgot to draw it in, I'll draw it in right now, shows right there. In fact, I can be a little conservative. I can go to the body of the candles, and the body of the candle says, yep, we just touched it today, right there. Let me open this up so you can see it. So that trend line resistance, when the MACD is just about to cross positive, the day is young, so we don't know if it's going to cross positive, but so far it's good action. The stochastic's at 41%. This is going to be very important. Why? Because if there's only just a bit of a pullback to full part of the gap, pull back in the next 2 days to the 139.60, 139.40 area, and then make a new recovery high, I would have to say that's really positive, because all of a sudden you've got the weekly chart, instead of breaking down, the technicals are still very weak. Instead of breaking down, it has a chance to make a cup formation. All right? So I'm going through these, and I'm going through them in chart patterns. All right? Now let me look at this. The IWM, which I said was holding nicely in the sideways consolidation format, has also just stopped dead right at that trend line. Look, there it is. I'm going to be as conservative as possible. As many candles right there. Then we stopped dead, and now we're towards the low end of the range. Day's young. We could still have another rebound. But if there's a failure and the IWM and the Russell 2000 suddenly falls and breaks down under the 9-period moving, let's just say takes out the low of the day, the open of 141.05, starts to trade in the 140.90 area, that'll be very negative. Now, that will be negative, not very negative, because the weekly chart is still way above the 9-period moving average. But it will say give a sign to say, be careful, because there's a slow rollover unfolding. Now, I said to my subscribers this morning, I like the EEM. And look at the gap. Huge, up 65 at 42.52. That's the iShares Emerging Market ETF. I wouldn't have got it because I would have wanted just a little bit higher high, probably not much more than the high of the 26th of June of 42.01. So we would not have got that. But this is going to be very interesting for a number of reasons. This is now leg D in the weekly, leg C in the monthly, and the monthly is now still with half a month to go, more than half a month to go. It is above the trend line resistance. So let's see what the EEM does. But I did like the action. When we get back, we'll be looking at gold, we'll be looking at rates, and we'll be looking at crude oil. And I will be back straight off these important messages. Dow's up 129. Let me show the 100. Oh, when I get.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, well, we're back. So look at bonds. You've got the 30-year, this is the 30-year Treasury bond yield, the TYX in white. It bounces over that little mini resistance level under the major resistance level and is made so far on the weekly chart. This could be a peak A, but today's, it's at 28.86 down 0.37. Look at this exactly on the resistance I was talking about yesterday. It's turned around. Speaking about, what is today? Tuesday, Wednesday, on Monday, and it's turned around, and that's the 10-year T-note yield. That's brown. This is the TNX. This is the one that most people follow. And here's the 5-year T-note, and that's at 18.69, 1.869, and it's pulled back even sharper. So the 5 years pulled back much sharper. The 10 years pulled back. 30 years pulled back the least. But look at the way the trend has moved from down to up, and now we're going to see why. Because if there's a takeout of last week's low in the 30-year, which was 28.23, that'll say that's it. Yields are going back up. Yields are going back down. TLT is going up. And here's the thing: if the 10-year goes under 23.96, it's trading at 23.14. Can't be 23.96. It has to be 22. Yes, 22.90, and it's at 23.16. So if it goes under that, it's going to suggest, hey, lower lows and lower highs. A break to new highs says, all cards are off. Yields are going higher. The Fed is going to get what it wants. Now, here's the other thing. Look at the iShares Global Timber and Forestry ETF. Very nice bounce, but it hasn't taken out the high of the 23rd of 62.64. It's at 61.72. Close. Good candle. Certainly, wow, look at that. The low of last week was 60.17, and the high was 61.69. And the high, the low this week is 60.22, slightly higher, and that was the low. And the high is 61.72, slightly higher as well. So we've had about the same proportion, but this time to the upside. So what happens this week is going to be very important. And the HGX, the Philadelphia Housing Sector Index, has in fact gone to a new recovery high. So this is G/C holding the uptrend beautifully. That's very important. Okay, so we've got Victor in Paris, New Jersey, I believe it is, online. Victor, how can I help you?
Yeah, isn't today a Weird Wally Wednesday where you have to be delta neutral for expirations next week?
Oh, I'd forgotten all about Weird Wally
That's the only reason,
Wednesday.
because I noticed you're having a pop and a drop. You're having lower highs and lower lows.
Yeah. Okay. So, all right. Just to briefly talk about this is a technique that was actually a discovery.
I don't think it's a technique. It's pretty accurate. If you go to every Wednesday, the week before expirations, you always have this little jump. The market's always crazy.
Right, and that was Wally. Wally was, why am I forgetting his name? We used to know his name all the time. And he had this technique, and the technique said that if there's this crazy upside and inversion, a reversal to what was going on before, the day before, watch out, because if there's a pop and a drop, it says something about the following expiration week. You know what? I can't even remember anymore what the implications were. But at the time, we used to make note of it. Although I must admit, I also know that it failed a number of times. So I'm just going to put it in the category of interesting. So that's Weird Wally Wednesday.
I think it's pretty accurate because you're having this rise with no reason, a rhythm, or rhyme.
No, Victor, there are a couple of things going on. See, there's what the Fed has just said, in a way, clarified for some people what they thought the Fed was going to do and wanted to do. And that kind of freshened the air. But at the same, I think it was a dentist in Miami. Maybe so. Gator says in the den. Anyway, but what I'm really looking at is the effect that we're talking about of a sudden upside spiral. And let me put it to you this way here. If you look at, I'm going to go to the E-mini because it's just the one at this particular point has given me a lot more feeling for the accuracy of the different indicators. If I look at the 120-minute chart, it spiraled to the downside at this, right as we're talking now. It was down 120 something, and then all of a sudden it made a low of 24.10 and started to move higher. And that was a 15-point decline. So basically what happened, because the market came back so strongly, it says to me that the internals of the market are still quite strong on the shorter term, that I'm going to repeat this, and I'll probably have to keep repeating it. Until there is bad news that impacts the market negatively and then gets repeated, the same theme. You can't have different themes. It must be the same theme, keeps coming up, and then comes up with greater frequency. Instead of once every 2 weeks, it's now once a week, and then it's every couple of days, and then you get the acceleration to the downside, and you get the volatility index, the VIX, which right now is trading at a 10.28. It's at a complete reversal from yesterday's big spike over 12. Now it's at 10.28. Until that volatility index starts to hold in the teens, starts off in the high 12s, then goes to the 13s. But it can't just do it like it did on the 29th of June, where it popped to 15.16, and then the same day it plunged back into the 11s. It can't do that. It's got to hold. It's got to hold that intense selling pressure. It hasn't done it yet.
I guess the government will keep on buying all assets. You remember history repeats itself. You remember what that other guy said, Bernanke said, and you remember what the last dude said. This is just a big bubble. The more it goes up, the worse it's going to be. It'll be quick.
Absolutely, I don't disagree. You're 100% correct. And if it keeps going up, especially if it keeps going up,
it seems like institutions are lightening up, because I see like that they open up higher and then they just peter out all these stocks.
That's been happening. So let me just take this opportunity, Victor. I'm just going to give you a little scenario that I'm looking at here. The pattern that we're looking at in the daily chart is a little bit like a diamond pattern with a breakout to the upside. But at the same time, I have no choice but to draw in some kind of a V-shaped pattern. Now, the V-shaped pattern, let me show you what I'm doing. Oh, I've already done it once, and now I'm going to do it twice there. and it's going to a higher high. So the V-shaped pattern, I'm going to make it thicker. I'll make it a single line. I'll put it 1, and then I'm going to make it style is 1. So I'm going to make it nice and thick, and I'm going to show you something that's going to be very important in my work, just in terms of looking at patterns that repeat over and over again and what the implications are. So style single, style is going to be nice and thick, weight. And what I usually do when I'm doing these is this: I make it into a thick blue, because the blue somehow on the internet it shows up really good. There you go. So you can see what we've done is we've got a slightly rising trend line, and now I'm going to make this a dashed line. I'm going to make all of this much easier to read in a minute. There, Victor, can you hold on? I wanted to show you this diamond,
I'll watch
this triangle pattern. Great.
Okay.
I'll be back with Victor and Paramus, and we're looking at the Dow up 132, and it's making a pattern that is going to be very important, and I'll explain what has to happen and what might not happen. I'll be back. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
John Logan has been hard at work making the TAS Profile Scanner Plus the best it can be, and he'll be hosting a special hour-long webinar for all TAS Profile Scanner Plus subscribers this Wednesday, July 12th from 5 till 6 p.m. Eastern. Right now, you can get a 30-day free trial to this amazing piece of software. See for yourself how it tracks 5,000 financial instruments in real time, over 17 different stock exchanges, U.S. futures, and currencies. This piece of software will change the way you trade, and it can be used with any trading methodology. The combination of price and volume is what makes market profile-based analysis so unique. We've opened up a 30-day free trial to the TAS Profile Scanner Plus, even if you've had a trial before, so now is a great time to sign up. You also gain access to John's July 12th webinar, How Price, Volume, and Time Make Market Profile Unique. Sign up for your free trial to the TAS Profile Scanner Plus right now on the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. So Victor wasn't able to hold, but I'll still go through the different parameters that I was looking at. Within this triangle pattern, what you can see is there's a trend line. To see this, there's the daily on the left, the weekly on the right, and the weekly in the middle. On the right is the monthly. And what we have here is an alternate count going to a C, then a D, and this I'm calling for now an E. Reason being, the MACD is still quite negative, and this is all-time highs it just made today. The MACD hasn't crossed positive, so that means that if the MACD crosses positive, you can expect the 21,620 or higher area to be hit and held. But if it deflects lower in the next few days, that's not going to be a good sign. And the stochastic's only at 59% with all-time highs. Here we are at all-time highs, and the technicals are way, way, way weaker than they were back on the right there on the 20th, 19th, and 20th. We're looking at the MACD. Look at that. I'll draw a vertical line. There's that vertical line. Look at this. This is the vertical line. I'll make it green because that's where the price. I'll make it thicker. I'll make it green, and you'll see that from this level to this level right here, the price is at all-time highs, but the technicals are not. So it says one of two things. That if there's a break technically on the upside with the MACD crossing positive and it's still negative, the histogram is still minus 7% instead of being over 0% right there. This is the histogram, that line. That's going to allow room for the upside. But at this particular point, I think this is just, at this particular point, I think it still keeps our category. So I'm going to answer a couple of questions at the same time. So we still remain short. Our stop has not been hit because we are short via the 1-to-1 instrument. And I've made the stop. We're short at, let me just double check here. At 17.30, and it's trading right now. That vehicle is trading at 17.27, down 3 cents. So I've made a really tight stop. This is the second big spike to an all-time high that hasn't taken out the stop, and I've made the stop 10 cents. Very, very tight stop. Why? Because my assessment has been that the daily has been in a consolidation mode, and it still looks to me like it's in a consolidation mode. The weekly is the one that's held. I haven't got a sell signal even in the daily. So, Victor, this is what I'm looking at. For me to go to start adding the doubles or the triples to the short side, I don't see it just yet. The day is young. I want to see what happens this afternoon into tomorrow. That's number one. Number two is, you can see this trend line that I've just drawn in here. It's just stopped at that trend line. It stopped at the pink, thick, twice hit rising trend line, and it's pulled back. So either there's going to be a spiral, just a breakout to the upside because too many people are wanting to short, or it's going to turn around and just chop and come back to the downside, and then 21,280 will be the first support. But believe me, if it goes lower than that, we'll be looking at a test of the 197 level that was hit on the 29th. And if that's taken out, all of a sudden you finally get a sell signal in the weekly chart. I've just made it really clear. Okay. Now a couple of questions. Now let's go to some questions. SMHs. What did was that Bob? Yeah, Bob mentioned about the SOX index. This is the SMH, and the SMH is trading at 85.64. So I also had a question from a subscriber because we are short the SMHs, and I put in a stop, a pretty tight stop, and if that stop is hit, then you've got to. So the answer is stay in that position that you have, and make the stop that I have on the SMH is the same stop that you have on the SOXS. That's the 3 times short. So that's just the way I'm looking at it. I have no choice. That's just, it has to be. I'd said Tuesday or Wednesday going into Thursday, I'm anticipating a doji type candle with a down candle to follow. I don't know if that's going to work out because the MACD did cross positive and the stochastic is at 53% in rallying, but the weekly chart is still very weak. The WEEK is WEAK, and that says to me there's a good chance that we will get that next pullback to give a test of the 83.99 period moving average over the next couple of days. So please, that's kind of what I would be doing. Next question was Intel. You know, this is fascinating because Intel had a pop-up over the last 2 days, but the weekly chart really doesn't look very good. I think it's later on that Intel starts to build some for the next big move to the upside for leg D in the SMHs. That's kind of what I'm thinking when it starts to pick up. So the next question was Caterpillar. Caterpillar is in leg D. Leg F in the weekly, and this is recycled, but at this point, leg D in the daily. Good technical, so we're going to be watching this very closely. And a leg D in the monthly, and it hasn't taken out the previous high of 2014, which is at 111.46. The high today is 110, round number. Whoa, we'll be watching that very closely. Let me type in 110 round number, H110R/N, round number. All right, we'll be watching that. Next question was the GE. Yeah, you see, yesterday, now this is fascinating for me because where did I type that over there? I said to subscribers this morning, it's interesting that I call it a portfolio, is actually looking much more to the long side than the short side. And, that to me was very important. There were a number of stocks we wanted to buy. If some gapped up and I couldn't get them, but I focused on them and they were very strong. This was before the Fed said anything. This is from last night. So GE had a beautiful candle yesterday. It's giving back a chunk of the pop-up today. This is still not looking so great in the weekly chart. The monthly chart says 25.17. The 200-period exponential moving average is the target, and it's at 26.41 right now. So GE is one of those that I definitely watch. So GT says this is a bear trap, closed shorts on the SPY, bear trap. So let me see the SPY. Let me go through this again. So I don't have any shorts on the SPY. But if you are short, I'm just going to make it real simple. If there is a push above today's intraday high of 244.10 and it's at 243.74, I would definitely see this is the candle you're looking at on the 26th at 244.38. I'm going to say to you, I would keep those positions. I don't, as I say, this is for you, GT. I would, if you have puts on them, I wouldn't cover just yet. I'd give it a little bit of room. The day is young. I think that we're going to close much weaker than we were at the day's high. We're up 118 now. Wouldn't be surprised if we actually close in the plus 65 area. And that's what I'm looking at. I don't know if it'll happen, but the trend line resistance in the weekly chart says, yeah, a push in the 2450 area, I would cover my SPY puts. That's just the way. Make it simple. All right. Next question was, oh, yes. So yes, missed it again. The darn steel stocks. I looked at it, had it on my list, and then we went for something else today, which is not bad. But this US Steel up 42 cents at 22.73, starting to try to build a base in the weekly chart. So it's very interesting. Yeah, they started to improve the steels. That's kind of important. It goes with the autos acting so well. We are long on the auto.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active objective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV, Directions Daily 20-plus year bull and bear 3 times ETFs, direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Our folks, Dow's up 120, S&P's up 16. So we're looking at crude oil. I'm looking at the USO, United States Oil Fund. Couldn't take out the high of the 3rd of July of 963. Had a high today of 955, down at 935 at this point. I don't really see anything. And the question came in the den about the crude oil. And I'm looking at this and I'm saying until that 9-period exponential moving average is pushed sharply above, it's at 9. That's at 952. That hit the high of the day, and it closes above and holds above for a full week. I really don't see crude oil doing all that much in terms of sustainability. That's the way I'm looking at it. If I go to the crude oil contract itself, it's the same thing. It's the same thing. It has to go above 46.23. Nah, it has to really go above 47.80 to 48.30 and then start to hold 46.50 as support for one whole week. And then I'm going to say to you, whoa, nice. This is the first time I'm seeing sustained strength. And that's the same thing about the VIX. I want to see sustained strength to be able to say, hey, now I'm going to go full ball to the short side. No, not until I really see some action where the VIX index trading at 10.28 starts to hold in the 11.80, 12.30 area for a day, and then pushes higher but keeps that as support, and then makes a higher high the next day. Bad news filters the market. I think we're getting close. I also think that today really could be a fake out to the upside rather than the downside. And now I'm going to run this quickly. Let me show you. INDU. To me, this action right now with the weak technicals is suggesting that there's no veracity there, that there's no sustainability, and that we're going to keep coming down, but it hasn't broken down in the weekly chart. That's number one. So daily chart says, yeah, these are just flurries to the upside, but basically you've got a holding pattern, and the holding pattern hasn't broken either to the upside or the downside. Aha. We get to the weekly chart. The weekly chart says easy. 21,280 is the 9-period moving average. Closed decisively below that for a full week. In other words, you can't go down and close above. Close below it sharply into the 21,170 or lower area. You've set yourself up for a pretty nice consolidation to the downside. S&P. I'm going to just run these rather than do it later when I run out of time. S&P hasn't made a new high. It hasn't failed quite as much as the Dow is holding at plus 15. But if there's a close anywhere below 24.38 in the next 2 hours, watch out towards the end of the day. That's not going to be a good sign. Not only that, the Fed has kind of spelled out everything. So that's what I wanted to show you. This is what I'm looking at. And I think the Q's right now about to make that doji with the SMHs. And if tomorrow is a sharp down day, not an up day, but a down day, then I think we're setting in place a consolidation that continues with lower highs and lower lows in the Qs. The XLK, yeah, the XLK has actually had a nicer move, But even there, the XLK at 5607, that's the S&P Select Tech Spider Fund. If it closes Friday under 55.40, that'll be a weekly signal to say, whoops, getting back to that sell mode that we were talking about. And the only thing missing here, I did the SMHs. SMHs are trading right now. There's that doji candle, 85.67. If there's a close anywhere below 85.48 today, and then a lousy session tomorrow with a close below today's candle, I'd say, you know what? Watch the short term. You've got to be really careful. A breakout in the Dow to 21,620. I just have to say, you know what? The upside could have tremendous support on every pullback, and then it's going to be higher highs and higher lows. I just have to look at it that way. But no, it has to go to 21,620, and the S&P has to make a new high. Sorry, I should have mentioned that. I took it for granted. No, it has to be with the S&P making a new high. All right, and a close, a new high close. Okay, let's continue. So we were looking at, that's what I wanted to go through. Now look at the TLT. The TLT is at 123.84. 3 up days, 3 decent days from the low that was made at 122.58. No big deal. It's $1.25. But what's really important is that the weekly chart, these 2 ugly candles, if anywhere in the next 3 weeks there is a close above last week's candle of 125.04 without making a new low, that means you cannot go below 122.58. If there is a close above, first of all, 124.22 is the 9-period weekly moving average. If you close above that, not you, the TLT closes above that iShares 20-year Treasury bond ETF, close above it, says, hey, be careful, because there could be a nice V-shaped recovery. And then once again, I go back to my triple yield chart and I say, hey, look at this. So far, it would have been easy just to squeak to another new high this week to continue leg A. So far, this could be a peak A if there's no new high this week. And that would suggest to me that the Fed is going to have a little bit of a toss-up going in to the next couple of weeks, because if the market starts to pull back and the yields go down with the TLT going higher, it's going to be saying there's some kind of weakness somewhere. So now let's go to the currencies. If you look at the EUR-USD, in leg E, MACD is good but flattening out. Stochastic is good at 87%, also flattening out. Weekly charts are both very strong. This is leg F in the weekly chart. And I said if it gets actually to a little higher than this point, what I think I said, I got to remember exactly what I said. I think I said if it gets to the 1.150 area, I think I said 0, and holds there, then you've got to think of the 200-period moving average in the weekly of 1.16 becoming a magnet. If it fails from here and pulls away, it becomes a repellent on the shorter term in the weekly chart. So I'm going to watch this very closely because of what's happened in the monthly chart, big rebound. So make it real clear. Under 1.13822, the euro-dollar currency pair could start coming down. The dollar, and this is going to be really interesting, the dollar is making the kind of candle with a higher low than was at the 30th of June, 95.47. Today's low is 95.51. If there is a push in the next 2 days above 96.03, it's asking a lot from the dollar. If there is a push, I'm anticipating that gold, and this is so interesting, from last night, from the close yesterday into early this morning, I debated with myself. There was no one else to debate with. I debated with myself. I kept saying, some of the gold stocks are acting quite well. Gold is making a low with certain candles, 2 candles that were on the cusp of saying, if there is a powerful move above the candle of the 7th of July, above 1228.1, if there is a close above, I have to consider a V-shaped daily turnaround has occurred. That will allow the MACD to cross positive, and stochastic, which is really lousy at 15% now, to actually move higher. No. It got repelled at the 9-period exponential moving average. I'd be real careful. I don't think the Fed has said so much, But there's a chance that the inflection point I spoke about a few weeks ago, and which we've seen in the dollar. Let me just do this if you don't mind. USD JPY in the dollar Japanese yen, which made perfectly the left side, right side price time action. All right, we'll be back and I'll show you what I'm looking at here because this is a very important period.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Yeah, in all this time, I think I completely forgot to show this. We made a peak E in the 10-minute E-mini chart. It's only at 24.39, no big deal. The high was 24.42.75, but it looks to me like it's going to start to fade. And if it does, watch 24.35. A close below 24.35 anytime today would suggest that it's going to go quite a bit lower, and that's how I'm looking at it. Now, let's get back to a couple of things that we were looking at. So Sarah sent emails about the XAL. Yeah, the XAL, which is the airline, the ARCA airline. Where did I type it in? It didn't go to the right place. I put it in over here. XAL. Yes, that's very strong. Leg A, leg B. This is leg D in the weekly, leg D in the monthly. Let me see if that really is correct. Always have to put up, see, now it's going to a D and an E. So yeah, the airline, because crude oil is pulling back, airlines have done very nicely. So yes, Sarah, XAL is acting well. So then you also say, why are you short the Dow? I've been short the Dow for quite a while. And it isn't, I mean, we're still short, and it's still, let me double check before I speak. Yeah, it's a penny away from where we shorted. I mean, hey, that's pretty good, I think, at least for now. So this is what we're looking at. No, I didn't say to short the. Wait, there was another. You made another statement about the. No, I didn't say short the QQQ. What I said is I missed shorting the QQQ, and that the Qs. Let me show you. The Qs on the daily are in a sell mode with a nice bounce. There's no question about it. Weekly chart is still in a sell mode. All I can say is that if there is a break above the high of June the 26th, 142.29, if there's a break above that, I'm just going to have to say, you know what? We've consolidated. That's all it's been, a sideways consolidation. Now it's getting ready for another move to the upside. I can't say that yet. No, we don't have a position. I have it on the lookout to short the QQQs, but I haven't got it yet. It hasn't given me any signal that I want right now. Next question goes, as MH goes up, do you know bears are trapped on gap up? More upside to follow. You know, all I can say is if the SMHs break into the 86.90 to 87.20 area, it's the same scenario as the QQQs. I'm going to have to say, you know what? Very short, a brief month and a quarter consolidation. Now we're up and away. I don't think so. That's all I can say. I don't see it just yet. So question from Mike about PPLT. We did that yesterday. I said, watch out. Could be a nice, to hold on. I think it's looking good. Today, gaps up. It's at 87.68. This is the physical ETFS, physical platinum shares. And that is, and it's at the highs. And that says that this, for whatever reason, platinum is holding at a 1.79% gain. It's above the 9-period moving average. Just in the next 2 days, watch 87 as support. If it closes under 87, it could be just a one-day bounce and a give back. So far, it's acting well. So let me tell you, this is up 1.79%. Gold is up 0.42%. There's a discrepancy there. And the pattern I'm looking at in right here, that I'm looking at in platinum on a weekly basis is saying the rally that you're looking at now needs to, at 917, up 18, needs very quickly. This is also speed. This is not slowness. You need speed. And you've got to see it start to trade in the 934 to 936 area. And I would say by Friday, it's just got to keep pushing away. If it pulls back and comes back to 911, that's on the contract. PPLT, let's move here an equivalent. If it pulls back and comes to the 8670 area, I'd say, you know what, single leg up failure, just be careful. Just make it simple, and you're in the position. All you need to do is manage the trade. I don't see any reason why you shouldn't be able to. Oh, that's the end of the show. Thanks for being here. I'll be back tomorrow. Stay tuned for the great.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,